भाई
ओके
नहीं, अभी मैं क्या करूं?
ओके ओके।
मे बी शी इज बिजी, तो रिकॉर्डिंग चेक कर लेंगे शायद। या अगर आपके पास कुछ है मैं कॉल कर देता हूँ, ठीक है? एक बार बेटर शी कैन ज्वाइन ला। लाइव सेशन लेने का बात ही अलग होता है, इंटरेक्शन भी होता है।
हाँ
ऐसे तो मेरे पास ढेरों वीडियोस है देने के लिए, बट लाइव सेशन की बात अलग है ना।
ट्रू ट्रू।
अगर आउट ऑफ स्टेशन है, नहीं अवेलेबल है तो बात अलग है, अभी तो ले रहे हैं ना।
सो कभी ऐसा आउट ऑफ स्टेशन या फिर छुट्टी वुट्टी पे रहो तो प्रॉब्लम नहीं होगी ना?
इन द सेंस,
आई में नवंबर में शायद मेरे कुछ प्लान्स रहेंगे आउट ऑफ स्टेशन का।
एक सेकंड सुनिए सर, मैडम लाइक क्लास स्टार्टेड, प्लीज ज्वाइन ना। ओके, या हाँ, तो जब आप छुट्टी पे रहे तो आपको वीडियोस दे देता हूँ,
ओके।
क्योंकि मतलब टाइम तो हमारा सेव हो रहा ना।
हम्म।
अब जैसे छुट्टी पे हैं, जैसे 1 वीक, जैसे मैं छुट्टी पे रहूँ तो मैं होटल में भी स्टे करता हूँ, आई मेक श्योर आई टेक द क्लास। अगर
ओके।
बहुत ही अनअवॉइडेबल है, एक आध दो दिन, एक, अब जैसे कोई वेडिंग है जिस दिन बहुत ही इंपॉर्टेंट नहीं हो रहा, तो एक बात अलग है, उसका कुछ नहीं, छुट्टी ले सकते हैं। बट एक दो दिन का ठीक है, 10 10 15 15 दिन बोले तो इट विल बी लाइक
नो नो, इट विल बी फॉर थ्री
I
और फोर
have to be
डेज
very professional and I understand you also are like working, so वैसा नहीं होगा, मुझे भी पता है। तो एक दो तीन दिन इज नॉट ए प्रॉब्लम, उसका क्या इश्यू है, चलता, वो मैनेज कर सकते। चलिए, लेट्स स्टार्ट द मार्केट रेशियोज, दिस इज अ डिफरेंट सेट। ओके, so in market ratios we have book value per share. So generally when you see a balance sheet, this is a balance sheet, and you have like total of assets as let's say 10 lakhs, and and your total of liability is also 10 lakhs. That is understood fact. Okay, now from this total of assets, if I remove the liabilities part, if I remove the liabilities part, okay, so like liabilities part is like say 6 lakhs. So what is the equity part? 4 lakhs, isn't
फोर।
it so?
या।
So this is debt part, this is equity part. So total of assets minus liability gives me equity. So I get the value of equity, and that is 4 lakh, and I have issued 10,000 shares to public. So now I will just divide, I'll just cancel this 4 zeros, and I'm getting per share value is how much?
40।
This is when I have issued the shares. I'm speaking about that year. Okay. In the coming years, the value of share may change, because the value of share may change in such a way, like, the share values, the share takes what actually? People's perception. All the people's perception about the company and all are taken, are factored in the share price. Okay, the market price depends upon people's perception about the company and what people are ready to pay for that share. If I have a $40 share, I can sell it for $100 also to someone, because that guy is ready to pay $100 for my stock. Why? Because my stock has that demand in the market. Okay, there are various reasons the perceptions are built, but as of now we are discussing about book value per share, so this is the formula for book value. Okay, this is the concept of book value. Now we will see the formula for book value. I hope you understood this one, correct?
या।
Yeah. So now coming to the concept, as what I explained you here, the same thing comes into picture. But here, see, I took like just equity. Like wherein my assumption was there is no preferred equity. Okay. But let's say equity, we will divide it into two parts. One is common equity and one is preferred equity. Let's say I divide this into two parts, common equity and preferred equity. Okay. So like then again, I have to remove this preferred equity from the total shareholders equity. So total shareholders equity is 4 lakhs and preferred equity is 2 lakhs, and then I'm left over with 2 lakhs, and then divided by 10,000. So what I get, $20 is my share value. That's right or wrong?
या।
Okay. This is like two, it's like, okay, 2 lakhs. Yeah. So the same thing they have mentioned here. They have also given the same thing, same version. Total shareholders equity is preferred equity plus common equity. Okay. From that, I am removing preferred equity. Why? Because I only want the common equity's value. Okay. And then, so in my example, 4 lakhs was the total equity, 2 lakhs is the preferred equity, and outstanding shares are, let's say, 10,000. So how much is the value of per share? $20, correct?
Hmm.
That is the book value of a share. That is the value I show in the balance sheet. I can show you some like balance sheets, like let's say, okay, I'll show you in another book how the book value looks like or seems like. Just a second. I'm taking the class and this washing machine guy has come. Don't know what, like, I called him at 2:30. He unexpectedly dropped in right now.
No one else is around at home.
There are many people, but like mom and wife, but you know, at times, like some things I need to speak,
You
you know.
have to be available.
Yeah, like they spoke to me and for like stand and all. Our old machine is like not working right now. So what a new one.
Okay.
So for that today, like I told him to come. I'm in holiday. So I gave him specific time, 2:30 or after that any time. But I don't know. These guys are like, you know,
Hmm. Unpredictable.
unpredictable people. So this is what I'm showing you, a balance sheet. Very particular about my time and all. But world doesn't work like that.
True.
What to do? So this you can see. This is a balance sheet you can see. So book value is also called as face value. Okay, it's also called as face value.
Face
Face
value.
value. That means the value at which you issued the stock. So you can see here 50 cents ordinary shares, or like they say 1 lakh shares have been issued at the rate of $10 each. So this is the issue price or the price at which the stock was issued. This is also called as face value. So here you can see 50 cent as the face value or book value. Okay.
Okay.
So you got this idea in the balance sheet. Correct?
Right.
Now I'm moving forward. So with this, you can also find out number of shares. See, if at all this is 4,50,000 divided by 0.50. Now you can find out the number of shares, outstanding shares also. Okay. Correct. You can find out the outstanding.
So now we are taking 4,50,000 as a
This is
total.
the total value of the shares, and this is the
Hmm.
per share value.
Okay.
So you just find out the outstanding shares, Suman.
9 lakhs.
Yeah, 9 lakhs. Yeah, just a second.
Yeah.
Total value by face value, book value, sir. Then we get. So
Yes, I think that is the 50 cents, right? Number of common
50
share.
crore. Yes,
Yeah.
yes. Sir, can you please unmute, sir?
Okay. So this is fine. So now let's move forward.
So we have taken 4,50,000. That is the total shareholder
Dollars.
dollar upon this 50 cents. That is the book value. This book
Face
value,
value.
right?
Yes,
Face
yes, yes.
value. Yeah.
Yeah, that gives you the outstanding stock, like 900,000, not dollars, number of stocks. Okay. So
Okay.
like very easily understood, 900,000 if you multiply with 50 cent,
50.
what do you get?
It
You
was
get
4.
4 lakh 50. That's it.
Uh,
Now, now let's go ahead. That was book value per share. I hope you have got the concept. Now we are doing market to book ratio. See, this is a very good ratio to understand the company's performance or investors like whether the investors who are holding the stock is worth it or not. Okay, so investors want to know the growth in their stock, isn't it so? Suppose, let's say, I have just bought a stock for $100. This is Kotak Mahindra Bank stock. I bought it for $100. and the stock has rose to like $800. Sorry, Kotak Mahindra Bank is an Indian company. It doesn't like
Hmm.
dollars on the currency, but I'm just taking an example. So what are you seeing here? You're seeing that your stock has gone 8 times of your investment what you have done. Am I right?
Yeah.
Yes.
Isn't it so?
Yeah.
So, if the stock is like you bought for $100 and still 5 years it is $100, then what is your what do you
Nothing.
interpret, conclude? Waste. It is not worth it. If it
Hmm.
grows, then it is worth it. So definitely, if it is more than one, here the ratio would be what? One.
One.
The
Yeah.
ratio should be more than one. The ratio should be more than one for you to be satisfied with this. Okay.
Hmm.
Okay. Can you just wait for it for a second? Like I'll be in second.
Sure.
Yeah, yeah.
Yeah, sure. Suma,
Yeah.
what the rate is trading in the market, that is the market rate, no? Is it right? For example,
So,
take
for
Mahindra.
example, I have bought the shares for 100 rupees,
Yeah.
and after 6 to 7, after a year, it has increased 800. So that is the market value of the share, current stock price per share. So
Yeah.
that has been
What
increased
about
by
that?
8.
What amount is the increase? That is the market value, or
Yeah.
what? I can't understand. Please again explain.
So 8 times here, sir has told
Hmm.
100 rupees stock has increased to 800. So now
Okay.
it has grown 8 times. So current stock per share, how
Yeah.
much it has raised? 8 times.
8 times. Okay.
Yeah. So that's what he was trying to make us understand. Till there, even I got it.
Then book
So
value.
I believe book value per share.
Hmm.
With the example, we will able to get it.
Okay. Okay. I will. I joined late, so I'm asking you.
Yeah, this so he started when you joined. This is
Yeah.
market book ratio.
Yeah.
That book value.
I think there is an example also. Yeah, 4,50,000. I think.
Yeah, he has taken that as an example.
Yeah. Yeah.
Book value per share. We can ask him to repeat.
Okay.
Market to book ratio is also called price to company current. Okay. So this 800 divided by 100 will give us the market to book ratio. So
Book
800 is our
means,
current stock per price and book value per share is 100. So that means we have purchased the stock in 100, that was book value per share, and now the price is 800, right?
yeah.
And that divided will give us the market to book ratio.
What amount we have mentioned in the balance sheet, that is book value. Is it right? There is a difference between the book value and market value
Right,
also. Yeah.
right.
Okay, so shall we begin? Hello.
Yes.
Yeah.
So what did you infer? There should be some growth at least. Otherwise, the share is not a worth buy, isn't it so? A worthy investment. Now comes the main concept of EPS. So it's like, EPS is nothing but IAC by Van So. That is Wang So. IAC by Wang So is nothing but income available to common shareholders divided by weighted average number of common shares outstanding. So I will give you a simple version of EPS, then I'll go for with the textbook version. Okay. Let me explain you simply what is EPS. Let's say there is a company which has 10 shareholders.
Mm-hmm.
That means how many shares are outstanding? 10 shares. Let's say it's like, like this is a company, it's a private company. So outstanding shares would not be there. Those will be held with the company's directors or proprietors or whatever. Okay. Owners. They are the owners. So now this company has earned $100 profit. Now, what is the profit here? Like, let's say it's not $100, $120. So I take $120 and from that I remove the preferred stock dividends, $20 divided by outstanding shares 10. What is the meaning of EPS? Earning per share. So whatever earnings have happened in the company, each shareholder is getting how much of that?
Mm-hmm.
Okay. So that's a very simply understood fact. So if we get, so like these are like 10 shareholders are there, one shareholder, like 10 shares are there. Let's say 10 shares are outstanding. There are two people who have invested. One has 6 shares, one has 4 shares.
Mm-hmm.
So now we find the earning per share and then we can say how much these two guys have earned. Okay. So for that, $100 divided by 10. So what is the EPS? Earning per share? $10. Correct. So the guy
Mm.
who has 6 shares will get $60. The guy who has 4 shares will get $40.
40.
Understood.
Mm.
So
Yeah.
this is EPS. So what I did is I have taken net income minus preference dividends divided by outstanding shares. This is a simple formula. When you Google out, when you go like Google this EPS, you get the same version. But our textbook is considering like our
For
textbook
an
is going deeper into this, so we'll understand what is their version. So write down the formula IAC by Wang So, weighted average number of common shares outstanding. Will you write down the formula? We'll discuss.
okay.
Okay.
Wait. Yes, sir.
Next. So now first we'll understand what is income available to common shareholders and how to find out this one. So first, when you make an income statement, you get net income, and you know how you get net income, isn't it so? We have already discussed while doing the profitability ratios, correct? I have explained the income statement to you. Am I right?
Yes,
Hmm.
sir.
So when you get net income, from that you will transfer that net income to retained earnings account. Fine. From that you will be like deducting the dividends. So there are two types of preference because we are finding out income available to common shareholders. So whatever the common shareholders have to get, they have to get at last. That means after meeting all the obligations, after paying interest to debt holders, after paying tax to government, after paying preferred dividends to preference shareholders, the leftover income belongs to whom? It belongs to
Shareholders.
common shareholders, equity shareholders. Okay. So so that net income we have. From that, we are removing the non-cumulative preference dividends. So there are the preference shares are of many types. There are various types of preference shares. Like if I go in depth, there are many like redeemable, irredeemable. Then like comes like convertible, non-convertible. Then comes cumulative, non-cumulative. So there are many preference shares, but here we are speaking about these two. Okay. See, from net income, you have to remove non-cumulative preferred dividends and cumulative preferred dividends both, because both these two are different kind of preference shares, and dividends have to be given to both the shareholders. And our agenda is to remove the preferred dividends definitely wholly. Okay, whatever kind of preferred dividends are there, we have to remove it, whether the preferred dividends are of non-cumulative nature or of cumulative nature, or whether it is like non-cumulative preferred dividends or cumulative preferred dividends, we have to remove it. But there are two things you have to remember. Non-cumulative preferred dividends are those to which if dividend is not paid this year, next year it will not be paid. What did I say?
Mhm.
If
Next
the
year it
dividends are
won't
not
paid.
paid this year, next year it will not be paid. Cumulative preferred dividends are those dividends for which dividend paid this year or not doesn't matter. Next year it will be paid. Understood? That's the
Okay.
reason why the name is cumulative. It will accumulate. The dividends will
Oh,
accumulate. So
okay.
for cumulative preferred dividends, if dividends are paid this year, it doesn't matter. It will next year it has to be paid. For non-cumulative preferred dividends, the dividends are like not paid this year. It will not be paid the next year. Okay.
Okay.
For non-cumulative, if the dividends are not paid this year, next year it will not be paid. For cumulative, if it is not paid this year, next year it will be paid. These are the 2 points you have to remember. Non-cumulative
Sir, we can
dividends.
paid last year and we said two amounts we can pay, or either only 1 year amount we can pay.
Madam, I'll just completely explain this. Then you ask me.
Okay.
Dividends not paid this year will not be paid. That means it has to be paid in this year only. Cumulative dividends can be paid next year if not paid this year. Now, so what happens is company first declares the dividend, and when company declares the dividend, that means they will pay definitely. They are confirmed that they'll pay. If they declare it, they'll pay it. Okay. So here, if they have declared in case of non-cumulative preferred dividends, if dividends are declared, you have to deduct whether paid or not. Did you understand what I'm saying?
Hmm.
See, whether paid or not, in the sense it will be paid, of course. Why will company declare then? If company is declaring, that means they know that they'll be paying that. Okay. Okay. So
Okay.
irrespective of paid or not, it doesn't matter. If it is
We have
declared,
to.
you have to deduct.
Okay.
Cumulative, if they declare or not, it doesn't matter. Definitely it will be paid in the future. So that is understood that it will be earned. So that you
Hmm.
have to deduct. Okay.
Okay. Okay.
Okay. So non-cumulative preferred dividends, if declared, you have to deduct. And cumulative preferred dividends, it is presumed that it will be earned, whether declared or not. It has to be
Hmm.
deducted. Then you get income available to common shareholders. Okay. Just make a
Okay.
note of this.
And how can we identify which is non-cumulative and which is cumulative?
That data will be given in the question.
Okay.
Data will be given. Data will be given. I'll give a question right now regarding this.
Okay.
So now we have done the, we have just like discussed about IAC. Now we will discuss about Vansco. Okay. Weighted average number of common shares outstanding. So this is what, this is time weighted in the sense, what happens if company has issued shares on January 1st. Okay. One, like 1 lakh shares. So this is outstanding for how many months? This is outstanding for how many months? Till December 31st.
Hmm.
This is outstanding for how many months? I'm asking.
11, 12,
12 months, of course.
12 months.
Jan 1st, December
20.
31st is like 12 months. So
Hmm.
we will like it is outstanding for one entire year, correct?
Hmm.
Or we can say 12 by 12. 12 by 12 is also 1. Now, June 1st, we have issued 50,000 shares. This is outstanding for how many
6
years?
months. 6 months.
6, half of it.
Okay, so 6 by 12. So why are we finding out this weighted average number of common shares outstanding? See, all shares would not be issued on day one. Some shares would be issued on day one. Some shares would be issued mid of the year. Some shares would be issued quarterly. Some will be issued last quarter of the year. So we have to see till what time they are outstanding, and based upon that, we have to divide the earnings amongst them. Okay. Do you think the shares which are outstanding for just 3 months, okay, like see, some shares are outstanding from the beginning of the year, some shares are outstanding from the like only like 3 months of the year. That means October 1st they have issued the share, so October, November, December, only 3 months they're outstanding. So do you think the earnings have to be distributed amongst the shareholders directly, or on weighted average basis, on time weighted average basis? What is justified?
Time.
Of course, from when they are outstanding, they should get the earnings. Am I right? That
Yeah.
is prudent. That is like common sense prevails there.
Hmm.
It's
Hmm.
wise to distribute the earnings amongst the shareholders based upon their outstanding, based upon from when they are outstanding, isn't it so?
Yeah.
That's what. Okay, that's like I'm able to convince you about this. Now, I want you to just calculate this one. Come on, go for this. What are they saying in the sense? See, Company Q began the year with 100,000 common share
Common shares.
outstanding. 10,000 shares were issued on July 1st.
Hmm.
Okay. This is like the beginning of the year they had this many shares, and this many shares were issued on July 1st. So July to December is like 6 months, correct?
6 months.
So 100,000 shares are outstanding from the beginning of the year. 10,000 shares are outstanding for half of the year. Isn't it so?
Yeah.
And the weighted average number of common shares outstanding for the newly issued shares was 5,000, of course, because these are outstanding for half year. So 5,000 shares it will be
Hmm.
coming. And so what we can conclude, 100,000 shares are outstanding from the beginning. 5,000 shares are outstanding for 6 months. Isn't it so?
Yes, sir.
Yeah. Hmm.
And what they did is the company reacquired 1,000 of its shares on October 1st. Since we are finding Vansco weighted average number of common shares outstanding, we only want outstanding shares. We don't want the non-outstanding shares, correct?
Right.
We want outstanding or non-outstanding? We want outstanding.
Outstanding.
When
Outstanding.
company reacquires shares, that
Hmm.
means those shares would not be outstanding now, correct? If
Right.
I what happens is the shares which I have issued to public, I can reacquire them if I want to privatize my company. I don't want my company to be a public company anymore. You know,
Mm-hmm.
Reliance Group and all these big families, they do that. This, when they get surplus money, they start reacquiring the stocks. Okay.
Okay.
So this company is also reacquiring the stocks, and like 1,000 shares they reacquired. The company reacquired 1,000 of its shares on October 1st. So what we will see is these 1,000 shares are outstanding for how much time? It is outstanding for 9 months. Hello.
Yes.
Yeah.
See, these 1,000 shares are a part of this 100,000 and 5,000 shares, correct? Out
Right,
of
right.
the
He has taken
shares
1,000
I'm
shares.
reacquiring.
Mm.
Yeah, so these are outstanding for 9 months, but these are not outstanding for how many months?
3 remaining months.
3 months. So
Remaining.
yeah, 250. So so I will remove that which is not outstanding. So I will get only the outstanding ones. Okay. Okay. Just do this question.
Okay. Should on July 1st. Okay. Okay.
Shall we move forward then? If you have done this.
So here the concept, understanding the concept, it is important ना for Vansco.
Yes.
Calculation तो यहाँ पे easily दिखा दिया है. It was
Yeah.
hmm,
Yes. Understanding the concept is the key.
minute.
Finished?
Just 2 minutes.
Yeah, you can take it.
And what about this 1,000 into 9 by 12? What that will give us?
Sorry.
9 by 12, the 9 months that has been
It was
taken, right?
it was outstanding. Yeah. It is outstanding for 9 months. What we want is how much time it is not outstanding.
Right. Okay. That is 3 by 12. How much time it was not outside.
Yes.
Okay. All right.
Now you should understand some concepts which I'm saying. Okay. So see, there will be some details, more details. Like, see, there may be some events which may happen during the year, like stock dividend and stock split. What do you mean by stock dividend? Stock dividends are nothing but these are the dividends which are issued by company to stockholders. Okay. Uh, like in the sense company doesn't want to give cash dividends to them. Instead of giving cash dividends, company is giving what?
Dividend.
Stock dividends to them. Okay. So by the means company wants to have more cash with them so that they can utilize this cash for some purchase or expansion of the business, or like for starting a new company or branch or something, anything you can take into picture. And stock split is nothing but the company's stocks are not marketable now. Like its stock has gone to $100. It's a big amount, you know. $100 is what? If you buy a mobile phone like for something 7,000 8,000 rupees, it's like equal to $100. Is 8,000 a small amount? No. So $100 by any means is not a small amount. So if the stock has gone to $100, it is like right now in such a condition whereby it is not that marketable. People are not ready to buy. So what company does is they go for a split. So what they do is one stock of $100, they split into 10 stocks of $10. Does it make any change?
No.
No.
No, it's still $100 stock, correct?
Yeah. Yeah.
The capital is still the same. So these two events can occur like in between the year or in the mid of the year.
Okay.
But what you need to do is there are three methods of finding out Vansco, taking into consideration all these events. But I will not make you to understand all the three methods. I don't want you to get confused. I want to explain you only one method for which what I'm saying you have to understand. You have to give what, you know, a retrospective effect for this. What do you mean by retrospective effect? A retrospective effect means these two which is happening in between the year or mid of the year are happening at the beginning of the year, as if they happen, like you have to show them in such a way. So I am explaining you what is retrospective effect. You have to show them in such a way as if these two did not happen in between the year but they happen at the beginning of the year. Did you understand what I'm saying?
Okay.
Yeah.
That is what is called retrospective effect. That means the stock split and stock dividend has not happened in between the year. It has happened at beginning of the year. Okay. Like that you have to show. So retrospective effect, stock split and stock dividend has happened at the
Beginning of the year.
beginning of the year.
We need to assume in such a way.
Yeah. That is what is called as retrospective effect. Okay.
Mm.
So now we will solve a question based upon this. So you just take this. I'll just be coming in a second. I'm just having some water. Just a second. Yeah.
Okay. Date wise.
Okay. Are you reading this?
Yeah, we are reading it, trying to
So
understand.
Matthew Corporation has these many shares outstanding and the par value is $10. They're outstanding on Jan 1st,
Jan 1st.
2010. During 2010, following share transactions take place. what has happened is some like in the month of April, on April 1st, 10,000 shares were issued at 50 each. August 1, company has repurchased 24,000 shares. Okay.
Okay.
Then October 1st, Matthew carries 2-for-1 stock split. That means 2-for-1. That means every one share has been split into
Two.
2 shares. Okay.
Okay.
Yeah.
And November 1, 15,000 shares are issued for $55 each. December 15, Matthew declares 10% stock dividend. Okay, so these are the conditions. Now let's start calculating the WAN score. First, we will take outstanding. We will take this 1 lakh outstanding shares, which is outstanding for how many months? 12 months
12
out.
12
months.
months.
So 12 months out of 12 months, correct?
Okay.
So 1 lakh and 1 lakh, like 12 by 12, 1 lakh. But one thing you should understand, there are two things happening. There is a stock split of 2-for-1. That means every one share has been split into 2. So like every one share has been split into 2 in the sense 1 lakh shares will be split into how many shares? 2 lakh shares, correct?
Yes, sir.
Every
Yeah.
one share is split into 2 shares. So 1 lakh will be split into 2 lakhs, correct or wrong?
Yes, sir.
Fine.
Right.
Every one share into 2. So 1 lakh into 2 lakhs. So that's the reason why I'm multiplying 2 here, correct?
Okay. So we are multiplying since the beginning 2 only.
Yeah, we are giving retrospective effect for that. Yes. Even though they happened at the end or between, we have to give
Mm.
retrospective effect. Now, 10% is stock dividend. So on one stock, we are giving 10% additional. So it becomes 1 plus 0.10. 10% of 1 is 0.10. So it becomes 1.1, correct?
Yeah.
See, 10% of 1 rupee is 10 paise.
Mm.
10% of $1 is 10 cents. So it becomes $1.1 or 1.1, correct?
Okay.
See,
Okay.
10 paisa, if you add to 1 rupee, it becomes 1.1 rupees, na?
Mm.
So
Mm.
1.1. So altogether it becomes 2,20,000. Okay. Okay.
So, okay.
So 1 lakh into 12 by 12 is 1. So 1 lakh into 1 is 1 lakh into 2 for stock split and also this for stock dividend.
Dividend.
Point number 2.
Okay.
So like the company has issued 10,000 shares in the month of April. So now if you take from April to December, how many months you see?
April to December.
Yeah.
9 months.
9 months, of course.
Ah.
So this is outstanding for 9 months. So
Mm.
10,000 into 9 by 12 is 7,500 into again stock split and stock dividend. So we get 16,500. Okay. So you do this first two things, then I'll go for the next.
Yeah,
Start.
let us do
Yeah.
this thing.
That's what I'm giving the time.
Uh, so 10,000.
Done then?
Just writing the bit explanation.
Okay.
So for rest of the year, the splits and stock dividends remains the same, right?
Yes.
Rest of the things.
Yes.
Okay, done till here.
Now, understand this one very clearly. Very important to understand. See, what happened is on August 1st, Matthew repurchases 24,000 shares to be held as treasury stock. So,
Hmm.
treasury stock is nothing but stock buyback. What is that?
Buyback.
Buyback or reacquiring its own shares. Okay. Or stock
Okay.
repurchase, also we can say. So now see this, whatever the company is repurchasing out of the existing outstanding shares. Am I right?
Additional.
No, no, no. They are repurchasing from the already existing outstanding shares. So
Okay.
these 24,000 shares, what they are reacquiring, were
Mm.
outstanding till what time? They were outstanding till August 1st. Am I right?
Yeah.
After that, will they be outstanding?
No. Only for
Because they are
5 months.
repurchased. So what we want outstanding shares. So we will remove the time when they are not outstanding. Am I right?
Right.
Yes.
That is what we discussed, na?
Mm-hmm.
So we should only find out the outstanding shares. We should remove the time when they are not outstanding, or the we will find out that time average based number of shares which will not be outstanding for the rest of the 5 months. We will remove that from this category. So now
Right.
24,000 shares will not be outstanding for 5 months. September, October, November, December, September, August, September, October, November, December. So 5 by 12, it becomes 10,000. And again, we will give the treatment of stock split and stock dividend. Why? Because the stock split has happened after the stock repurchase, and the stock dividend has also happened after
Ah,
the stock repurchase. Okay.
right.
So we will give the treatment to this. Next, November 1, 15,000 shares were issued for $55. So these shares will be outstanding for 2 months, November and December. Okay. And will you give stock split to this? No,
No.
because these shares have been issued after stock split has happened. Okay. Hello.
Yeah. So only stock
Only
dividend will
stock
be there.
dividends would be applicable. Yes. So only stock dividend is applicable. We got this. Then what you need to do? 2,20,000, 22,000, 2,20,000 plus this plus this will give you one score. Please go for the rest of the thing.
So repurchase one we have to minus.
Minus only for the time period for which they are not outstanding.
So can you please explain November first 15,000 shares?
This 15,000 shares are outstanding for how much time, madam? From November to December, 2 months, correct?
2 months. Yeah.
This 15,000 shares have been issued after the stock split, but before the stock dividend. So stock split will not be applicable, but stock dividend would be applicable. That's it.
Said what? 2,500, sir?
Sorry?
15
2,500.
15,000 into 2
Into 2 by
divided by
12.
12.
You have to do the time weighted, na? You have to do the time weighted average, madam.
Got it.
So December. Okay. So now.
Finished?
Huh, kind of wait. Can
Process
you
again.
just explain this 21750 after the deduction only we got, right?
After taking all this like 2,20,000 plus 16,500, you should
Mm.
remove this 22,000 which is not outstanding.
Mm.
Okay. And then 2,750. You get 2,17,250.
Yes, sir. Got it.
Okay,
We
got
can
it.
deduct 22,000. Not we can add the one.
That is subtraction, madam. This
Yeah,
is bracket,
subtraction.
na?
Yeah.
Yeah, yeah.
So in every problem, this repurchase whenever it comes, so we have to
You have to
deduct.
subtract for the time it is not outstanding. Okay.
हाँ, ठीक है. For the 5
I'm gi-
months.
yeah, I'm giving you some homework. Don't do this. This is already done. Method, I don't want you to follow these two methods. I'm giving you some homework which you have to do at home today. Will you do?
Yeah.
Yes, sir. I'll try.
Take this homework.
Simple one.
Or else
I'll
if you
take
want, we
the
can do in the next.
screenshot.
No, if you want, we can do in the next class.
Yeah, even that is
Yeah, we'll
fine.
try, sir. Yeah, we will
I
try.
Yeah,
will
okay.
try
Then,
if we are
then we will,
able
no,
to.
leave it, leave it, leave it. Leave it. We will do all the questions in the coming class. Okay. Then I will give you from Gleam, I will give you the homework. Correct?
Okay.
ठीक है,
Fine?
ठीक है,
Sure.
ठीक है. Okay, done.
So we will take the class day after tomorrow. Happy Dasra in advance.
Thank you.
Yeah, happy Dasra to you too.
Yeah, bye bye. But like the one thing is, you have to again go to this video, and Suman,
Yeah.
as you said, you will be practicing. You have to do that even. Okay.
Yeah, I need to practice earlier sums as well.
Yeah. So as you have got tomorrow's time, so you can capitalize on that. Okay.
Okay, okay.
Okay, sir.
Thank you. Thank you.
Thank you.
Yeah. Yeah. Bye. Yeah.